Imagine trusting someone with your finances, only to find out your data was being used to train artificial intelligence systems that are shared with hundreds of clients without your knowledge. Today, that is a reality facing the accounting profession. Hi everyone, I'm Lucas Hopkins, and I will be discussing the state of ethics and corporate social responsibility in 2025. Today, AI is transforming the way people operate, whether it is in education, law, healthcare, or accounting. It has undergone significant changes in such a short period. It can automate journal entries, suggest categories, and even flag potential fraud. But how is the AI being taught? The more AI learns, the more data it requires, and that data often comes directly from client records. This opens up a central ethical question. Are we protecting client data? Or are we sacrificing privacy in the name of making work easier? AI tools are designed to become smarter over time, and they achieve this by learning from data that has been inputted. For accounting, this means basic client details such as name, address, contact info, invoices, tax filings, bank records, and financial statements before filing. This makes sense from a technical standpoint that the AI would need this information. However, client information is typically confidential until the company releases its 10K forms. The way AI is being trained is now a question of ethics. Is consent being given before using client information? And I mean beyond the lengthy terms and conditions that no one reads and hits I accept at the end. Is the data being separated by each client? Is complete transparency being used to discuss what the AI is learning? There are 3 risks that Amrita Shrudere, an accounting manager at Wasabi Technologies, discussed in an article for Kiplinger. The first is about data privacy and security uncertainties. When using AI, users must provide key data sets that may contain sensitive information. Most data sets and networks are vulnerable to hacking, or users may inadvertently compromise confidential information, which will be illustrated in a moment. Secondly, there are concerns about biases and fairness. When AI is being trained, it is taught to output information based on a specific task. That involves human involvement, and there is a possibility that the output may be biased, leading to distorted outputs, potentially misleading organizations into undesired results. Lastly, there are transparency issues. Times when organizations use a black box AI, which is an AI system whose internal workings are a mystery to the user, which makes it challenging for the other end users to understand the decision-making process. Returning back to the users may compromise confidential information, such as Sage Group, which is a major provider of cloud accounting software, came under scrutiny for the way its AI models were being trained. Reports showed that customer data was inputted into the system to improve recommendations without explicit consent from those customers. A customer using the system realized the system was outputting another customer's invoices. Thankfully, this customer did the right thing by reporting it, but it remains a significant concern regarding how the information was used and the flaw in the system by sharing client information. While a company spokesperson has claimed that they followed the legal system and it was only a minor flaw, but was it ethical still? Were the users informed of how their information is being used? A difference between rule-based and values-based. A rules-based culture asks, is this legal? A values-based culture asks, should I do this even though it is legal? Now, Sage Group may have followed the law, but it failed to uphold its professional ethical responsibility to be transparent with users. In accounting, trust means everything. When any software provider is willing to risk confidentiality in the name of improvement, that means they are prioritizing innovation over integrity. Bringing this scandal back to corporate social responsibility, we can look at it through 3 lenses. Value to society. Ethical accounting is about trust between the client and the institutions. It is more than just numbers. Financial information affects people's livelihoods. Balancing stakeholders' interests, ethics involves finding a balance between developers, more innovative tools for efficiency, and protecting clients' desires for privacy and control. Accountability. Who will be held accountable for it? Whether it was a human or a machine that made a decision, someone must be held accountable for it. Will it be the accountants, the developers, the cybersecurity team, or executives in the company? So how can we ensure that AI respects privacy and upholds business ethics? One method is to leverage federated learning. This allows AI to become smarter by learning from multiple datasets stored on various users' systems without ever moving or sharing that data, ensuring privacy remains private. Another option is to train general AI models in synthetic data and then fine-tune them towards specific client needs. This avoids the need to input client information into the machine, learning the program, thereby respecting client boundaries. We also need explicit opt-in data consent written in plain language, not buried in 20 pages of terms and services. These are all technical solutions, but they're formed by ethical thinking. AI is not the enemy of ethics. However, it does compel us to reconsider our approach to responsibility and transparency. We can no longer say the system did it if we design, deploy, and rely on the system. We are responsible for the creation of the system and its outcomes, whether good or bad. Ethical AI is possible, but only if we ask, can we build it? But should we build it? Thank you.